The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this 18th day of May. And lo and behold, we've got the Fed coming out at 2 o'clock with a statement. What can they do? We'll talk about that. Let's just move right along and say the Dow is unshirt, 17,530. The S&P is up a 1.5 at 2,048. The comp index is up 23, much stronger than the others at 4,739. The VIX index is still in the 15s at 1581. It was higher earlier on, 15. Yep. And we've got the E-mini up 225 at 2045. Let me just show you this. Single leg A up in the 120-minute chart, sitting on the 9-period moving average in the weekly. The daily is having an inside bar from yesterday's very strong down move. And we've got the 10-minute. Let me show you there's a chance that we're looking. I don't think it's going to happen. Let me, wrong chart. Let me move it away from this one onto this one here, ESM 16. You'll see that it had that single leg A up. Yes. I had a question earlier when I sent this to the Den back at about, was it 8 o'clock? Whatever time it was. So let's see. So there's a question. All right, we've got a little problem right there. Just let me know if there's an issue. We're looking at the E-mini, and in this particular instance, we're looking at it up to 25. And what happened was from this low that was made at 2,042 at about 9 o'clock on the, what date was that? The 16th. There was a very sharp move to the upside, and it went to a peak F. It was the end of wave 3 to put the Chapman wave together with the Elliott wave, comes down to 4, has a cup formation and spirals up to 2069. And that was just at the close on the 16th, of the 17th. And then what happened was we had a very sharp move to the downside yesterday. If you look at Elliott wave, it's a little complex, and it goes a big 1 to the downside, up 2, down 3, up 4. And this is the very big issue that we're looking at here. There was a left side, right side price time match. Now I'm going to squeeze this chart for the 10-minute chart of the E-minis. Now have a look at this. From the low that was made on the 15th at 6:20 in the evening, I think that was Sunday, right? And there was a move up that continued higher, and it made an arch formation, but a successful test from the 2035 low that was made on that Sunday night to 2042. And that 2042 was at exactly 8:50 on the 16th, 10 to 9 in the morning. And then we started this move up. But if you look at this, there were two inside wedges, as well as the Chapman wave left side, right side price time match. So when we came down sharply yesterday, the S&P, the E-mini, went right through that support. And then the rule of thumb that I have is if in an arch formation, if you don't within 2 bars, close above the left side low bar, close, that is, within 2 bars, there's a real good chance you're to come back and test it. Well, lo and behold, we did that almost immediately, went to 2036 at 3:30 yesterday. And then what happened, and this is very interesting, they started an H formation in the Chapman wave. There are a number of formations we talk about. If you've got my CD introducing the Chapman wave methodology, you'll know about these patterns very well. You just see them all the time. The market is made up only of 3 patterns. It's either straight up and straight down. That's one pattern. And it's either a cup or a V-shaped pattern. That's one pattern. So that's number 2. So it's part A, part B. Or it's an inverted V or an arch. And that's number 3, part A, part B. So those are the only patterns you get. And in this particular case, there's your straight down move. There's your arch. There's the lowercase h that can go to an M pattern. If it's successful and it doesn't break the low, in this case, the low of 236 No, sorry, it wasn't that low. It was the low of 235. That's a positive. That's the very large arch formation. Also, with a look at this, left side, right side price time match came in quite early. Came in quite a few 10-minute bars early, about an hour early. But what's really interesting is then you had the spiral to the upside. So it's the same rule of thumb. You broke the left side low of 2036.75 right there. You went to 2036.25, close at 2037.75. So that's a good sign. Then it comes back down and it goes underneath it, closes below, and then within 2 bars, it goes right back again. That says you can now have a rally. That rally should fail either at a left side peak of importance, the next one up, or one of the moving averages. In this case, is that moving average right there, a 9-period moving average. And if it is successful, it should climb and test the arch high. Well, it did. Went above 2046.75, spiraled up, but then it has the Chapman wave, another pattern that I call the Chapman wave single leg up. Single leg A up. It can actually happen on a B. It can even happen on an F/A. But it's really a news-related item that just forces the price up artificially, in other words. So now what we're looking at, we have 2 prices to look at. We have the left side, right side price time match that says that at exactly 2 o'clock, you're either going to spiral higher and go to 2054.75. Right now they're at 2046.25. That's that one. Or you're going to come down and test the 2035 level. If you take out 2042 on the downside, there's a real good chance you're going to go to the low. And if you take out on the upside, I'd say somewhere around 2047, there's a good chance you'll test the high. This is after 2 o'clock. So now let's go and say, wait a minute, what is the Fed going to do? We've had some pretty good numbers, at least as far as the Fed is concerned, as far as employment and certain areas in the economy. So the things that they look at are now in play as being part of the vernacular that they were looking for, part of the stress factor requirements to go to another raised quarter point. On the other hand, they don't dump. This is an election phase, number one. Number two, they're looking at retail. And what is the retail index doing right now? The retail index is down 73 cents at 74.03. This is the market vectors ETF right there, which I should mention that we short for a while for those who are lucky enough to be able to get shares to short. Why? Because I'm anticipating it's going to come down a little more. I think the sector rotation is going to be what's an issue. And I think that the Fed will be looking at it. My thinking here is the best case scenario for those who want higher rates is for them to say that there's a really good chance that if conditions continue along the lines of the data that we've just received, in the June period, we will probably be raising rates a quarter June or July. And the market's now going to be in this tussle between haven't done it yet, maybe they'll change their minds, and whoops, here's a game changer. I'll be back. Basil Chapman, Dow's up 7. I haven't finished all the numbers. I'm sorry. I'll get to them as soon as we get back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let me just go to this for a moment here because I'm not sure that I finished it. In fact, I've already moved on to about 5 steps. I can't remember where I was. So just to look at this particular chart, the 10-minute E-mini. So this single leg A says it'll fail if it closes on any 10-minute bar. 2 out of 3 bars closes below 2042. It's liable to make that A and come almost all the way back to 2035. But this is Fed speech day. This is Fed announcement day. This is Fed beige book. This is the minutes. So I think that we're done with the downside. We're pretty much done with the upside of a high of 2052. And now we're just stuck in a range. My guess is as we get into the 1:40 time frame, 20 minutes to 2 Eastern time, you'll start to see either a rally or whatever it is, the anticipation. But right now, I think we just kind of stuck here. Now, I'll just make it real clear that in this particular pattern, the single leg A can become a powerful force if there is a spiral to the upside. And then the high that I just said, what was it, 2053, I think it was, if that becomes support. On the downside, I've already told you what I'm thinking. Now, I just want to go through a couple of things. Look, the home builders, the housing sector, Philadelphia housing sector index, weekly chart is still, like many weekly charts, they're still strong. I'm looking at this and I'm saying, hey, I love the weekly charts are so far acting fantastic. By the end of the day, we'll see what happens. We are mostly short, but at the same time, we've already got a really nice cushion because we've already dropped so far. So let me finish the numbers now. So home builders right now saying this is just kind of stuck in the area with probably more downside risks of just the short term than the upside. We'll see what happens with rates. Let's go to gold. Gold had a sharp pullback earlier this morning, and then it bounced very strongly. But let's see how strong it is. No, it's still down 5 at 1271. Stuck in a range. My thinking here is that so fascinating. I'm still thinking that the dollar, DXY, is going to be favored on the short term. Look, it's just sneaking up very quietly. We've been long for a while. It's acting quite nicely. The weekly chart needs a lot of work before it can really be considered bullish, but it's nice for a bounce. And that's really what I think. As the gold and the commodities take a breather, we're going to have a little bit of a rest period. Let me just finish this and we'll go to our callers. I want you to look at the TLT. The TLT is down sharply. It's down 1.30, 130.05, having made a peak D. Hasn't yet given me a sell signal. By the end of the day, it might. We'll see. And we're looking at that peak C in the weekly chart at 135.25 at 130.06. That's a lot of points to go. 5.5 points to be able to get there. I just have to say, make it real simple. The TLT closes below 128, and you're probably going to be testing 126s by next week. And if the TLT closes at any point, spikes above 132.50, that's 2.5 points above. That says, hey, we're going to be going, the rates are going, staying low, and the weekly chart is going to go to a leg D above 135.26. At this point, I'm just neutral. I still think that the Japanization of our bond yields is here, and that any rally in bonds is just going to be a peripheral thing. Real quickly, we'll go to crude oil, and then I'm going to go to Dave in Myrtle Beach. So hold on. We've got peak E, if there's no new recovery high today, about 49.44 in the crude oil contract hours. What is the dash line? The dash line is my Chapman wave inside wedge target line, and that said that by yesterday you should be getting to the 48 level, and we did that. So that's just a resistance line. So I hope that answers the question. Then let's go to Dave in Myrtle Beach. Hi, Dave. How are you?
Hi, it's Steve, but good to talk to you.
Oh, it's got Dave right in front of me. Hi, Steve. How are you?
I'm great. Speaking of oil, I'm interested in a small growth oil service company called DXP Enterprises, DXPE.
Oh, okay. Now, do you have a position in this yet?
Yes, I own the shares. Just bought them in the last couple of days.
So now, give me your thinking on this. DXP is DXP Enterprises, and as Steve says, it's in the oil. So precisely, they find it, they jig it, they drill it, they process it. What do they do?
No, they sell pumps and all kinds of equipment that supplies the Schlumbergers and those kind of people.
Now, why is it not rallying then? So wait, what's your thinking here? Oh, that's your question. My question.
Yeah, right. The question I have is that the oil service sector has done better, but this particular company is way behind the rest of the group. So I was looking for a catch-up move.
Yeah. I like your thinking. I don't like the stock chart. So now, how are we going to resolve that? Let me go A, B, C, D, and then it spirals up to an A, B, C, D, E. So it fulfills the Chapman wave. So that means if we were to get from 13.72 down 23 cents today, if there was a rally into, I'm afraid to say it, but it really has to get all the way to the 1607 level where the 9-period moving. Oh, this is so tough. And I'll tell you why it's tough. Because it showed absolutely no signs. It even gapped down, and they didn't even try to fill the gap. There is something going on in this stock. I would much rather buy the stock on a bounce to show me that there's some energy. A, B, C, D. Yeah, it does. It does give Chapman wave notations. If this can get a strong leg A, well, no, it failed. It went to an A, B, C on the week. You know what, Steve? I'm going to make the recommendation. Do you have others that you've been following in this particular area?
Sure.
Can you give me a name? Maybe let me look at them and I can at least compare them. I'm finding it, unless today by 4 o'clock, whatever the Fed says activates the oil instrument that allows this stock to say, hey, I'm in play. And the only way it will do that is it's at 1371. It has to push above and close above yesterday's high of 1463. 1463 is 90 cents away. The way it's acting, 90 cents is really hard. Normally, I'd say 90 cents for a stock shouldn't be too difficult. But 90 cents for this stock seems to be really tough. Give me another name, and then I can maybe compare them.
Yeah, well, in the big, I don't have another small cap name. I've just been watching Schlumberger, SLB, and some of the big cap.
So your thinking here is that if the plays catch up, the percentage gain could be better than the ones that have already moved because they've already got their big gains from their lows. I like that thinking, but I'm also inclined to say, look, Schlumberger is coming down. It's down $1.50, $1.05 today, 73. Yesterday I had a call. Was it yesterday? Either yesterday or the day before, and we were looking at APA. Oh no, I didn't have a call. I had one of my emails came in, and APA was one of the stocks, and I said I like what it's done. Apache. Now, why have I got no notation on it? Ay, ay, ay. So this is ABC. I even remember doing this, D, E, and then it started again. It went to A, B, C, D, E, and then it spiked to another high. You know what I'm going to suggest? All of them have had a very good move. I would be inclined, now we might miss it because the Fed could just do something today that reignites all these things. I'm really of the opinion at this particular point, based on the USO and the USO, which is at leg C, so it could still go to D, that this is a very select move. I think it was, no, it wasn't AAP. That's the Advanced Auto Parts. That's terrible. The auto parts folks, we're short an auto parts company, and they are tanking. You know what? Give me a moment, and I'm going to look. I'm going to shout out to the den. If there's an oil stock that is in the same kind of area as your original one, DXPE, so that we can kind of compare it to see maybe it's the sector, this particular sector. Can you hold on?
Sure.
Okay, I'll be right back. Folks, we'll be back. Dow's up 18.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So we've had a little quiz there. I thought I found something. Give me a second here. Why doesn't it tell me what it is? All right, well, I can't compare that one because I don't know what it does. So this is what I was looking at. So, Steve, I'm looking at the charts, and I thought, wow, I've just found a perfect one. I'm going to put up your chart, DXPE, for those looking in the Tiger TV. You see that sharp move down from that peak E, and it's gone straight down to the 13s, and now it's just trying to bounce, but it's kind of failing. And then the weekly chart rallied, and I thought, okay, here's one that I'm almost sure should work. and I know it's in the geophysical area, and it went to a peak D, and it did plummet down, but the weekly chart turns out to be a little bit better, and its IO is a symbol trading at 7.56, and it is ION, geophysical core, and I always look this up, and I never remember what they do. I'm just going to say, I was thinking chart patterns more than anything else, so I'm going to say, what do they do? I just wanted to, not necessarily for you to get this chart, I wanted to tell you why I was looking at, let's see if I can find what they say. I don't know why they always don't tell you right at the top. IO, I'm trying to find abbreviation, input, output, anything. I don't care about that. Ottomans. All right. I thought this one would be real quick, and I can't find. But I did want to look at it because I remembered it as a chart pattern that kind of looks similar. And if you're looking at it, so this is IO, and the name is ION, geophysical core. I've looked at it for years and years and years, and I always forget to buy it because it's one of those stocks that once it starts its trajectory on the upside, it just continues going higher and higher and higher, and it does that until it peaks out in a Chapman wave D or something like that. And this one has come down. So the chart pattern, I thought, oh, I remember that. I looked at it just recently, and I had notated it, and it made a peak D. So this is what I'm looking at. Are you able to see my chart right now?
Yes. Mm-hmm.
Okay, so what I'm pointing to, you see the high that was made on the 2nd at 9.65 in the daily chart. See how the MACD went a little bit flat at the top? It didn't confirm all the strength that it had before it was making previous highs. And then the stochastic went from way in the 80% area way down to the single digits. Now it started to rally a little bit as the MACD flattens out. Stochastic isn't quite ready at 8.69%, but at least I've got the start of 1, 2, 3, 4, 5, 6. After 7 candles, I can say that there's a leg A to the upside, and it actually tagged the 9-period exponential moving average. So now for the first time in this particular stock, I'm saying, aha, this is the start. Now I can look at the 120-minute chart, and I can say, all right, 120-minute chart, give me a little more information. The 120-minute chart says, hey, this looks like that S&P chart, 10-minute chart you were looking at before with the H patterns. And it says very clearly that the move that's being attempted right now that's moving higher, if it fails, all it's going to do is make another, like an H, lowercase h, and retest the lows. But if by, this is a 120-minute chart, by Wednesday today, by Thursday afternoon, Friday morning, for some reason it's been able to clear 7.92, then the 805 area, the 200-period exponential moving average, then becomes a target. If I look at your DXPE, and I'm looking at the same chart, you can see it's been repelled at that 9 EMA, and that 9 EMA is not so far away. It should have actually gone above it. So there's a difference now in the charts. So I can't, in good conscience, say at this point, I could, if by Friday or Monday, you're looking at a chart that has not broken the low of, whoops, where did it go? The low of 13.42 made 3 days ago, but instead is getting into the wick of this candle, the candle of the 13th, and trying to test 1590 to 1610. Then all of a sudden, I'm saying to you, hey, now that's a pattern in the weekly chart that often produces a really nice strong bounce where it started to move up, comes down very sharply, doesn't take out the low. In this case, it's the low that goes back to 1304 on the 4th of March. But instead, you've got the MACD and stochastic acting very well, and the pullback hasn't turned the MACD into a negative. So I'm just trying to give you a little bit of what I'd be looking at to be able even to say to you, hey, normally I'd say, hey, it looks good. Why don't you just have a little nibble here? And if it rallies to such and such a point, you can add, and your core position will be with a stop at the entry point. And then the second trading position can now have a bit of a stop and let it run and see where it goes. You could even add to in 2 weeks' time if it's holding well, or if it takes out the initial low, you don't want it. I can't even say that here because it hasn't shown a sustained, even yesterday's strength wasn't sustained.
Right. That wick of a few days ago is what I need to be watching. Okay.
I think so. And I'm just going to say to you, and the reason why I wanted to spend a little time on this is that we don't know how the market will react this afternoon. It's a little oversold, so it could easily be a bounce, and then we could start coming back down again. But most importantly, it's areas like Schlumberger, some in the oil service areas. This is where you want to be looking, because if Schlumberger takes out the high of yesterday of 75.25, now, of course, there's a big difference in price between paying a teenager and playing an older stock in the 74s, something in the 11, 12 area. There's just a big difference in the number of shares. But you don't have to buy that many, because it's a matter of getting a position that has legs. And I'm looking at Schlumberger, and the way it's held and made slightly higher highs and higher lows says, if it doesn't take out by Thursday or Friday, if it doesn't take out, say, 73 as key support, and instead is rallying above 75.24, I'd look at that. I'd even put a penny, 1.1 penny above 75.24, the high of yesterday. I'd start a little position, because 75.86 is the 200-period moving average that it looks like it wants to tag. And then if that's acting well, I'd quickly run, and I'd go to the DXPE, and I'd say, aha, now is my stock starting to move. And if it is moving, then you could say, now I can start to add a little bit to it. Give it, I would say to you, don't give it anything under 13.42 is the low. If it takes that out by 1 penny, I'd be out of it. And I say, nope, you're not ready. Do you see what I'm trying to use? I'm trying to use something in the sector to be the lead and one of the good stocks in the sector, rather than to take a stock that's not acting well and say, well, if you do play catch up, you can have a great percentage gain. At the same time, if it doesn't, it could give you a quick 15% loss before you even know it.
Yeah, I was hoping the generals would pull away, and that some of the troops would follow along behind, and maybe that's just not ready on this one yet.
But wait a minute, that's exactly the scenario that I'm giving you. That if Schlumberger does move, and this one starts to play catch up, then you can take it. But it needs to.
Understand. Yeah.
It's the slipstream. If you've ever raced a motorbike or a motor car or something, you know it's the slipstream that you want.
Exactly. Get them moving, and then I guess what I'm saying was I probably was premature on this one, and probably should have waited to see it turn a little bit before I put the funds in there.
I think so, yes. And not only that, at this particular point, we've got the sector move, so you might be getting in so that it gives you a nice cushion. It might be a slow move to the upside, but at least it gives you a rising tide. Hope that helps you, Steve.
Thanks so much, Basil. It does.
Thank you very much for calling. Appreciate it. Have a great day. And that's Steve from Myrtle Beach. I've been in Myrtle Beach. It's really pretty down there. I'll be right back. Gaza 43.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Just got a couple of questions, and I'm going to go to Bill in a second, but first of all, this cartoon here I think is very apropos. This is one that I had drawn years and years ago when I was in my days of being a cartoonist and illustrator. So this one says, so this woman's climbing, the husband and wife, I think, or boyfriend, girlfriend, they're climbing this mountain. And she says, turns around, she looks at him and says, so big deal. The day after you finally take the plunge back into the market, it drops precipitously. Let's just forget about it and enjoy the view. And he's climbing, and he takes over, he takes the lead. And as he gets to the top, he says, so she says, let's just forget about it and enjoy the view. And he says, I was, but all I see now is deja vu. And of course, he's at the top looking down. So I was actually looking at my CD to find an answer to the question, can the low bar also be the high bar? And it can't. I'll try to find that in a moment. Let's go to Bill in Boston. Bill, how are you? Bill, hi.
Yeah, can you hear me? Hi.
I certainly can.
I'd like to have a look at NVIDIA. I went short after earnings, and wow, this thing's gone up like almost $10 after earnings in a straight line since about 4 or 5 days ago.
Okay.
I got out with a small loss, and I'm wondering, what do you think of this thing?
Okay, so there are a couple of things that are going. Folks, we're looking at NVIDIA. The weekly chart has spiraled, and I have to call this new leg C in the weekly chart to the upside. The monthly chart is just magnificent. One of the great bars. If you were long, you'd be looking at this and saying, wow. If you're short, you're looking at this and saying, ow, right? You drop the W. So what we're looking at is that the gap, and Bill's talking about what happened on the, I had this in a short term, I didn't even put it down as a short. I was looking at it and I thought this area seems to be, things are going on in the whole Activision, or this whole, at least that I understand in this area. So I looked at it and thought, okay, I'm not going to do anything with it. I'm just going to watch it. So it made the PG double top, and it pulls back from 37.46, goes down to 35.17. And then toodle, it goes up. And look, here's an SAR, one of those SAR, it's called the parabolic SAR. It hits it exactly, and then it doesn't give you a chance to even get in because the very next day it gaps up. That's the news-related thing on the 13th of May. So it goes from 36 to 43.40, where it is now pretty much at the high of the day. Here's the big question. At this particular point, if I was looking at it and you called me up and you said, is this a stock to short or is this a stock to go long? I would say to you, Bill, can you do me a favor? Can you just look at the chart and you tell me at this particular point, would you be buying or would you be shorting? So I'm going to say to you, Bill, would you be buying this right now or would you be shorting it?
I'd be trying to short it again.
Okay. So now you're, excuse me. So your bias is to short it, But let me explain to you a couple of things that are going on. I don't know if you ever use these technical tools that I always show, but you've got a gap to the upside, and all of a sudden the stochastic jumps, and now it's at 92%. To me, anything above 90%, unless I'm getting a peak, D, E, or an F, is fantastic. So that means I'm the one that's going to give you the shares if you want to short them, because you want to short them, I want to buy them. So I'm going to take them from you so you can buy them back from me. But you're going to be buying them back from me if the market doesn't crater 150 to 200 points today, but instead even stays just minus 40, or if it goes higher, plus 60, because there's just enough uncertainty about uncertainty that the bias is to be buying, because many of the stocks that we have on the short side are still tanking, but they are right at an area where they might want to find support. This stock looks to me like a 45 to a 44.50 to a 55.50 stock at this particular point. Now you can say, you know what, I could take 2 points. I have no problem, because that would mean that the rest of the answer to the question is, where is it going, is that it's going to turn down and drop sharply. I just don't see it, because the pattern that it has right now, at best, is like that single leg A that's successful because of the technicals being so strong in the daily. The weekly 90% stochastic MACD is strong. The monthly chart is just stupendous. I guarantee you that by June, I could have a completely different opinion, because it's starting to make a doji top and it might be turning down. But right now, I just have to say to you, I don't know how you want to ameliorate going up, but if you're looking at it as a short, it's not one of my candidates for a short. You could be 100% correct, but I think it has to complete the up move first. And I don't think I want to be there for another potentially 3%, even 5% to the upside. If it really, I mean, on a day like this, uncertainty, it shouldn't be doing it this well. And I think that my bias right now is to say to you, I think it's going higher. I'm not sure how much higher, but if this is only leg B to the upside, well, let me do it as strictly as I can. Let's see if I can see if there's an instant restart, ABC. Oh, I guess I could call this an E. It doesn't have anything look like an E. It looks like a B. It looks like a leg B. Bill, I can't. I'm trying my best. I'm trying my best to ameliorate the pain. I really can't. And I'm going to say to you, look, it's entirely up to you. It could turn around the minute we complete our conversation. The market could suddenly get nervous again, and then the Fed could come out, and it could be a horrible day, down 500 points, and your NVIDIA goes from 43.41 to 41.30. It makes you feel much better. But it has to have that kind of negativity to be able to turn it from here. This is good action. So here's what I'm going to say to you. If you want my opinion, normally what I do, if I'm wrong like this, I get out, and I'll tell you why I get out. I get out because if you are thinking of shorting, you'll have another chance if it can get to the 44s. You'll have another chance if it gets to 44.5 or 45. And if it drops from here and it goes, you get out and you take your loss, and then it goes to, say, 41.30, and it starts to decline from there, you could start your shorts again. But I'm just saying to you, if it was me, I would take at least something off to say, hey, I want my cash. I don't want to be seeing my cash shrivel up like that. I'm kind of strict about that, so I'm going to be strict right now. I'm going to say, Bill, I think it's going higher. I'm not sure yet how much higher, because it has to do with market conditions, but I do see 44s, and you want to see it back in the 41.60 or lower area, and then you can feel a little bit of comfort. But at this particular point, I think it's looking much better on the upside than the downside. I just don't see it. Your thinking is the gap will be filled, and I think you're absolutely correct. But it could go a little higher before it does that.
I might be dead by the time it goes there.
Yeah, you see, it's just not, it's not worth it, because you did something and it didn't do that, and now you want to punish the stock because it's not listening to you. I got news for you. Both you and I can say anything we want. This stock has no idea what we're saying. It's going to do
All
what
right.
it's going to do. So just
before I let you go, if you did have time to look at Taser sometime in the future, I'd appreciate it.
I think you're looking at the appropriate stock right now because of your NVIDIA. Taser is exactly, you're being tasered. Okay, so see, there's a difference between Taser. Taser, I will try to do Taser, but in the meantime, hey, try to ameliorate that. Don't give it much more. At least take something off, okay?
All right, thank you.
Let me know how it goes, Bob. We'll be watching it. Bill in Boston, we'll be back, guys, at 46.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We are back. Just wanted to tell Andy Heck that I'm hoping this weekend to listen to his webinar. A lot of fantastic information. Just wasn't able to do. Oh, that's coming up. It's coming up tonight. And I might be able to listen to some of it over the weekend. It takes time, a lot of information there. So a couple of questions. Let me just do this. First of all, Bill in Boston, in the den, there are a bunch of people that have said to me things like, where is it here? NVIDIA also making chips for cars. And of course, cars are selling like hotcakes, although you can't see it in the stock prices. And the other thing is NVIDIA is the chips are in the gaming, and I think it was in the 3D. Am I correct here? If I can just find it. I can't find it now. But yeah, so whatever it's doing is doing something right that is just exactly benefiting from all companies trying to get into virtual reality. J&J in the Den says, yeah, this is it's important to know that virtual reality. So I think just be careful. That's all. So yeah, a couple of quick things. Yes, Walmart is down sharply. Target is down sharply. That's the reason why I think the RTH is still it's at the high of the day, but it's gapped down very sharply. Not a great candle. It's trying to find some kind of a base here, but it's really not looking that good. Quick things I wanted to do before we go. We're done for the day. Crude oil. Let me just do that one more time. Crude oil. Oh, made a new high. Okay, so it's made a new recovery high. We'll see what happens today. I think that the commodities are just in an area where they look fabulous, but I think they need a bit. If I think they need a break, they don't know that I think they need a break. And that's the reason why I think that the dollar is just holding well. I don't think the dollar's on fire or anything like that, but we'll see. Because if the Fed says anything that make it look like they're not going to raise rates, gold will move higher like it usually does. The market will move higher. We might start covering the shorts and switching to longs just yet. I just don't know yet whether we'll do that. I've got an update for my subscribers at 215, 230. I don't think we're going to make any changes. Quickly, NDX, short interest. Yeah, the short interest, I know. I'm reading a lot about this. There's a lot of nervousness out there. A lot of people short. Soros is short. A lot of things going on. And yet the short interest is really quite high, and that should give some support. The regional banks, I don't know if I've got time other than to do, say, KRE. We're going to see what happens after 2 o'clock. KRE is, on fire. It's up 1.22, up 3.15%. That is the SPDR S&P regional banks. They're expecting higher rates. I'm expecting the Fed to talk about rates because this is their agenda. They've given it to us. And I think almost all the things they're looking for have been met. Just the nervousness about whether the market goes down in this political season is not what you want to be at the Fed for, right? So in the meantime, this is great action. Let's see if the XLE at 30, the KRE trading at 39.91 up 122. If it crosses 40.20 at 215 or 230 this afternoon, that's a really good sign. It means that probably rates are going high. At least the short-term rates are going high. I'm skimming through these. XOM, is it a short? I don't see it as a short. I think it's acting very well. Look, no, I don't think it's a short at this particular point. It's holding well at 89.87. I think it will be a short-term trade to the downside. It's looking good. I would not be short at this point. Maybe tomorrow I have a different opinion. Right now, it might be making a little double top here. That's okay. But at 89, it has tremendous support at 80 in the 87s. So I'm just treating it 86 to 87. Yeah, a little pullback maybe, but that I wouldn't short it particularly. Chinese investors are hoarding web addresses. I don't know if that is a commercial or whatever. So, okay, let me just do this. And I'll tell you exactly what we're looking for. The VIX index should start at this particular point to start to slide a little bit as it's not sure. It's down 20. Yep, it is. It's down at 1533.24. I'm going to make this real clear. If at 230, you get that big spike or up or down, and then it reverses, it's really 230 that you know what the market's doing. If the VIX index is below 15 and this market is up 80 or more points in the Dow, that's a really good sign at 230. If in fact the VIX is in the 16s and the market is down 80 points, be real careful because there are a lot of stocks that might be holding support here, but they're still acting very weakly. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.